Hey, good morning, good afternoon, good morning. Hey, Sam, good morning to you. Good afternoon, Ramesh. How are you guys doing?
Hey, Vivi, good morning. All good, man.
Hey, morning. All right.
Good morning, Vivek.
Sorry, you were saying anything?
No, just good morning, Vivek
Hey,
bhai.
morning. So, how was the Valentine? We just had, Valentine's Day. Yesterday was Valentine's Day. Hope you were able to celebrate with your partner, with your loved ones. Uh, we don't do. I know we are all here to talk about investing, but for the love of investing, I I just tweeted, uh, I wrote a love letter to my stock that I love. So yeah, for a little bit fun. So I wrote a love letter to my stock. Maybe you should try that exercise. Look at the stock that is, I guess that's the most individual position in your stock. Maybe write a love letter, you know, for for Valentine's Day. On the occasion of Valentine's Day, let's write a love letter to the stock that we love. Right. So yeah, that's a fun. All right. So what we have today. Um, a couple of things. I think the two major things. One is definitely the 13F filings are out. I'm a little behind. We had some friends coming over for dinner yesterday, so that parties goes until early morning. So I haven't had yet published the. So generally on Twitter, I will publish in terms of on 13F. What do I find? So I look at almost 80 super investors, what they are doing. But I will do that today. But you guys here will be the first one to get a peek into what so-called smart money is doing, right? So we'll go through that. I just finished consolidating the data. So now I'm at least ready to talk in this meeting. I'm not yet uh, ready to post it on Twitter or X, but I'll do that today later. But what few earnings are coming up, and as usual, some interesting news, some hot stocks we can talk about if that helps you. And I think last week a couple of you had requested to look at coin and insight, so I just pulled up the data. Maybe we'll look at an overview of that. That's it. I'm sure we have more than what we can cover in 2 hours. So we'll not have. I don't think we'll have a dearth of content. If you want to add anything else, feel free. Ramesh is saying Nvidia, Avgo, Tesla, too many. Maybe I think what's is that a puts to write or too many or maybe letters to write to?
Yeah, love letters to write to.
Okay, I don't believe in, when it comes to the market, it's okay. You can be promiscuous, so it's fine. You can write love letter to 3 or 4 stocks. Uh, Sridhar says, I need to write to stock not doing well to get some love. My China stocks are starting to do well. Yeah, yeah. We'll talk about China. I think that's one of China. Is China becoming cool again? Right. And yes, I do have on my topic to talk about China. Yeah, so the portfolio is sitting, even though the market is not at all time. I think maybe market did hit all time high, but the portfolio has done much better because of the Chinese stocks that I hold in the portfolio. They've done wonderfully better than the overall market, right? So that's cool. It was unloved investment for 2 years, but it's okay. You position sizes accordingly, and I never got out of China, but kept adding it as and when market says it's uninvestable, but kept a position size for which I'm comfortable, and now you reap the rewards. Uh, China was always cool. I don't know. I mean, it was an unloved sector, right? There were headings in the financial media, China uninvestable, right? I think the famous came from Mark Mobius, where he said, we should go to emerging markets. And then maybe a few months later, he was like, I can't get my money out of China. So those are the times, if you have your thesis, if you have looked at the companies, when everyone is running away, yeah, that's the time. Go and buy it. Yeah, that's why you bought it, you know. But again, be aware of all the risks that we have in China. If you own any ADR, on it, we really don't have any operational control on any of the Chinese companies, right? Not that I want to have operational control. I'm not an activist investor, so it doesn't matter much to me. But why the big institutions, I mean, except David Tepper, I will look at David Tepper. Why, they kind of are not the sword from why the investment flew out of China was, hey, you all you have uh, is your stake in a Cayman Island or in one of those tax sheltered um, areas or regions, and they have an entity created over there which has a stake in the Chinese company. And through our ADS, all we are getting is an economic interest in that VII, variable interest entity. So there is no operational control. Don't have the really shareholder protections if you're owning shares of Ali. It's not that if I own shares of Alibaba, I can go and cause some operational changes or take a board seats on Alibaba. If you own enough of it, you can't do that. All you have is an interest in a VIE, and that is why a lot of folks were not happy with it. I'm okay, and I'm not putting half of my net worth in Chinese stocks, so it's fine. All right, so yeah, so that's some of the stuff we're going to talk about. Anything else? Anyone? Okay, I see a few new names. Anyone want to introduce joining here for the first time before we get started? Or, all right, a lot of shy people, or maybe you might have sneaked in here earlier as well and may not be your first one, so that's fine. I might have missed noticing your name in the previous meetings.
Hey
Uh,
Vivek, this is Chayan. I joined after some time. So good
yeah,
to be here.
you're like, okay, because the name is familiar, and so
Yeah,
you're back. Boomerang.
yeah. We'll talk. I'll message you. We'll catch up
No
soon.
problem.
Thanks.
Oh, welcome back. Welcome back.
Thank you. Thank you.
Jose saying geopolitical risk overblown. We have seen this movie before. Yeah, yeah. I mean, anytime I hear about the extremes, it's I get a little more interested in it. Did we cover Alta? No. Did Alta report earnings? I mean, I don't own shares of Alta, so I've not looked into Alta. But Sridhar, did Alta report earnings? Uh, Not this. Yeah, so then I didn't look at it. I mean, long back we talked about Alta when I think the shares were down, and I think Warren Buffett took a stake in Alta, or was it some other beauty company? I remember maybe talking about this maybe when the one of the super investors had taken stake
Yeah,
in.
Warren Buffett. Yeah.
Oh, Warren Buffett did it. Yeah, okay. So I think that time I did talk about Alta. We looked at, in terms of the business metrics of the company, what interests me or not. This is a sector which I'm not a consumer of by any stretch. I'm not a consumer of the products of this company, but I think I did talk about it a little bit on Alta. I did I did some boots on the ground research. I talked to the ladies in my house and saw what do they think about Alta. Hymns almost doubled to 61. Yeah, hymns we'll talk about one of the some of the hot stocks. So we'll look at hymns. All right, guys, let's get going. I think we have a decent crowd. So welcome everyone to our Saturday discussion, some fun, some investing ideas, some interesting charts in our regular TradFi And also, a little bit eye on the other side, which is a crypto economy. We'll look at both. So our session number 267th, almost 5 years in the running. And thank you everyone who joins here every week. So let's get going. Before we dive deeper, everything that we discuss here, just go through the disclaimer. You don't have to read the whole, but don't trade based on whatever you hear in this meeting. We'll talk about individual stocks. I'll tell you what I bought and sold. None of them are recommendations, but I share it just from a transparency perspective. If you want to share, great. If you're not, that's fine too. I just want to be transparent and what I did on the long stock positions this week. Right? So let's get going. Happy Valentine's Day to you all. It's time to celebrate. Time to celebrate the love. And did you say the words? Come on, don't be shy. Did you say the words to your loved one? You know which words I'm talking about. So if you did not, maybe today is not too far away, right? Valentine's was just yesterday. You can be a little late. Take your love to a nice place, to the restaurant, go in an evening, book a nice, dinner, have a candlelight, maybe have some, nice essence, create a mood, good lighting, look at him or her and say the words SPY, QQQ, ETF, and life will be cool. That's all. Right. I hope you are not hoping for some romance advice from me, man. These are the words. For an investor, you don't have to think about anything beyond that. People love it. ETFs. These are the words you need to know. You don't have to make it very complicated. Okay. Yeah. Say the words to your portfolio every day. Say your words to your loved one every day. Stay cool. We'll talk about hard stock, but the basic stuff is let's start with ETFs. Okay. All right. If you have not, fall in love with these ETFs. So what did we see this week? Inflation numbers were out. And inflation is hot, man. It's hot, 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 super hot. For a change, inflation went back up. So Wasteland Capital is an account I follow. It became active again after a brief hiatus. It does some nice graphics. So it's broken it down in terms of the whole CPI. CPI was up to 3%. Food acceleration is in food because of eggs. Eggs are up what 14%, 15% because of avian flu. So we have a less supply of eggs, and hence the prices have gone through the roof. What else is up? Shelter is 4.4%. Transport is up 8%. Right. So are we gonna go back to higher inflation? Don't know. But if market was expecting maybe we'll get a one cut. Earlier we were looking at to get a cut in June. That is out of the door. So forget about getting a cut in the June if inflation continues to stay so strong. And let's look at a little bit details. Food is high. Energy is fine. This all items less food and energy, which is the core inflation. This is where the Fed looks at it. It's like 3.3%. Right. So I hope that Jerome Powell doesn't become Arthur Burns, that he has to raise the interest rate. But that possibility, let me say the probability is not zero. Fed has got only two jobs: maximum employment and the price control or price stability. Now if we see the inflation turning the other way around, and at least in the second phase of his presidency, the Donald Trump and his administration actually kind of making it clear that they are not focused on Fed to reduce the interest rates. What they are more focused on is to bring the inflation down, bring the prices down, which is a little different from the first term wherein Trump would tweet, you want Jerome Powell to reduce the interest rate. So I won't be too surprised if Jerome actually raises interest rate by 25 basis points, right? But I don't think he'll do it. That's gonna just spoil the legacy. Just spoil his legacy. He has done, okay job so far. But if it gets out of control, that's going to be very, very bad for the markets. And this is why I went to Costco this week for the eggs. There are no eggs available. All are gone, right? So it's like the moment they get a new supply, and if you're not there, it's completely gone. But market continue to climb the wall of worries, man. Inflation, no issues. The other thing that we continue to hear is tariffs. There is never a dull day here in at least our last 3 weeks. Something or the other will always be news, but no problem. You're not getting any rate cut, no issues. So I was looking at the probabilities yesterday of the Fed rate cut in terms of the CME Fed Watch tool. Now, that much. I mean, this one is now even less. The July is less than 50%, right? So maybe we'll see. Not having anything now in June, maybe July, or may not be till September. So we'll see. But market continues to perform, man. Even despite all these things, right? Are we not gonna rate cut? Remember earlier market used to swoon in if there is a little bit of hint of we're not getting any rate cuts, the markets will just go crazy. Didn't see it this time. So far year to date, SPY is up what 4.3%, QQQ is 5.5%, IWM 2.2%. Dow Jones Index is actually done better than SPY. It's up 5.2%. I mean, what more can we ask for? We are 6 weeks into the year, and I'm being a little more cautious. Man, this is too much. I mean, not that we have not seen the story before, but we just came from like 2 great years, and now we are already up like 4% for the year, more than 4% for the year. Right? That's really great. So looking at year to date, while the tech is a little bit of struggling, some of the companies, the rest of the market is doing good. Financials, because on the financial side, we see some big greens. On the diversified one, I think except the tech, that too, like some of these big techs, others have performed. I mean, Max 7 has underperformed the overall market. So only one stock in Max 7 is just blowing up. We'll talk about that as well. But if you are in the have a diversified portfolio, life is pretty good. Nothing to complain. So this is what sometimes I get little, hey, this is too much too soon, right? We just came off, and this is the total returns. We just came off 2 wonderful, wonderful years. 2023 is 26%. This includes dividend. And then 2024, we got almost 25% returns. Right. So what more can we ask for? Last time when we had these 20% returns was in more than 3 or more 20% returns. That was in 1999, somewhere around here in 1990s. Right. Probably it's the second time in the history since we've been tracking it since 1950s. Maybe this will be the second time where we could, I mean, we are only 6 weeks into, right? So anything can happen. But if we get another 20%, that'll be magic. right? That is what will be more surprising to me than, hey, if we maybe get a red year or we don't perform well. But pretty good year so far. And, after the last 2 great years. Solon's, let me go through some questions. I'm completely new to trading. How much do I need to start? Thank you, Jay, for responding. So Solon, I don't know if you're completely new to trading or investing, right? You need to first figure out what is that you want to do. This is the stuff that you cannot just answer in 2 minutes. You need to understand yourself. What do you want to do? What's your expectations? When do you need the out, whatever you are investing in trading, when do you need the money to work you for? Is it like next 1 year, 5 year? How long is the time horizon? A lot of stuff goes into that one. So I don't think I can answer it right now. What books or courses should I start reading? So I think so. There are a few books I can suggest. Start with the book Psychology of Money, because when you're talking about anything related to investing, what I've seen is psychology is more important than understanding the financials or finding the great stocks. You don't even, if you're very new, just stick to again, to you. But that's how I started journey, because unless you unless you figure out how to analyze the individual companies, stay with a broad index ETF, right? S&P 500 giving 26%, 24%, not bad at all. Maybe start here with the broad-based index ETFs. Right? Read a book, Psychology of Money. It's great around long-term investing. Other one could be One Up on the Wall Street by Peter Lynch. That's a great book. Which else? I mean, yeah, I think these are the two you could start with. Don't start with The Intelligent Investor. You might find it boring. If you're completely new, there are only few chapters that are interesting, but start with these two. Get on to focus on financial analysis or trading little later, but understand how the overall, at a very high level, how the markets have worked over the decades. Then I think trying to get deeper will be helpful. Right. Sector performance. Right. I love that we're broadening up, right? Financials, materials, consumer staples are all doing better than S&P, and industrial, energy, utilities. The market is no longer driven only by Max 7. Right? That's not the case. That was the case, I guess, in 2023, the big techs were driving. 2024 was all Max 7, too concentrated. We were getting worried about the concentration of the market. Now the market has started to broaden up, right? which is actually a healthy sign. We don't want to have the market driven by very few companies, right? Now we are starting to see that the companies that did not, or the sectors that did not perform in last few years, because all the capital and the limelight was taken by the AI related stocks. Now those sectors have continued to perform. And this is why it is important, if you are on the passive investor, don't have much time, is to stay with a broad, diversified ETFs, so that you don't have to pick and choose. This year, sector X is going to perform or sector Y is going to perform. You don't know what company is going to work out. We don't know what the CEO of this company is going to do. Yeah, staying with the ETFs makes sense. But good to see this diversified rally. And few stocks are hitting 52-week high. There's a couple I hold in my portfolio, and a couple of them actually hitting 52-week low. Ford and in INDA, which is the ETF for Indian equities, this week it hits 52-week low. But multiple other stocks are hitting 52-week high. And Fear and Greed Index, I'm a little surprised. That is actually in the fear one. I thought, I mean, during the mid of the week, I saw it in a neutral one. I thought it might move to the greed, but maybe people are starting to hedge it and have bought on the put options, etc., which I don't do it, but a lot of folks do. I was a little surprised to see that the index shows that we are not even in a greed phase, right? So which actually got me to thinking. I thought market is little more more risk averse than I would want it to be. To me, the most riskiest position is when everybody thinks that there is no risk in the market. But that's a time when I feel that it is the riskiest position for us, right? When everyone is like, everything is hunky-dory. The skies are blue, the sun is shining bright, and it will always will be, things are great in the market. There's nothing to worry about, right? We have seen those cases when you see this index moving to greed phase. Right? Look, today it doesn't look to be. I was actually generally surprised when morning I took the screenshot. Like, where is the fear in the market? I don't see it. But maybe because folks are hedging it, and the way it calculates its combination of those 7 elements, that shows that little bit afraid. It also means that I don't have to start looking at trying to hedge my portfolio a lot right now. Right? So for lesson for me from this would be, I can have a fewer hedges than what I would normally do if the market is on greed. So that's how you make use of these on week to week basis if you want to. Looking at the earnings season, we still have earnings in full swing. A few companies that I would want to, next week I'll be looking at is, of course, Baidu, Arista Network. These two I hold in portfolio. Carvana, because I'm interested in the story of Carvana. There is one short report on Carvana, but the stock damn keep going up. So I want to see what's happening with Carvana. I don't hold the stock. Toast, again, I don't hold Toast in portfolio, but yeah, if the business is looking good, maybe from that perspective, I may want to look into it. But that's what I'm interested in. Of course, Alibaba, Jumia, Unity, Mercado Libre, XYZ, which is like it's a block earlier known as Square, and finally Rivian. So I don't hold Rivian in portfolio, but that would be another EV company that I may want to take exposure if the business starts to look great. I'm not interested in Lucid. I'm not interested in what are the other US publicly listed some EV companies. I don't, the pure EV companies. Lucid is one. Of course, Nikola is gone bankrupt. But I think Fisker already declared bankruptcy. So Fisker doesn't trade anymore. Which are the other EV companies? I remember the times when we had like a lot more Lordstown Motor. That's now bankrupt. A lot of stuff came through. Came to the public market through their SPAC and all that stuff, right? So, but not interested. Rivian, because they continue to. They are still selling stuff, but I still don't like their unit economics. As of I looked at them in Q3, so that's why I want to look at it. Does the business now looks interesting to me or not? But what else you want to look at next week? Meanwhile, for the newbies, let me share something with you guys. If you are completely new, because I think in one of the sessions I did cover the stuff which was for completely newbies, right? How to start your journey in investing. So let me the starter's guide. Okay, okay, so let me share this information for those who are completely new. I did cover this topic. All right, and here is the info on the recording. Okay, so either you can watch, so I covered this topic in the details in terms of, sure, what did we talk about it, right? The overall process of investing. So before you even trying to invest money in the market, you need to do your homework. Make sure your house is clean up, fix your personal finance side first, then figure out what's your goals, understand yourself, build your portfolio, then where to read, where you can find all the information. So you can watch these recordings and might help you to figure out, how to start thinking about investing. It's a long journey. I don't have any quick fix because there is no quick fix to investing, but it's a process. I need to go through the process. Okay. All right. A-Lab. That's A-Lab is which stock? Astera Labs. Astera Labs is that related to space, Alfred? Or is it, let me just see, what does it talk about Astera Labs? Semiconductor, okay. Oh, I think that was Astra or something. All right, so maybe we can bring A-Lab also. Are they reporting earnings, A-Lab? Yeah. Oh, they reported last week. Okay. Yeah, I don't own this stock. I don't think it's on my watch list. Anyway, so it gets the connectors, high-speed GPU and server. So I own Arista Networks. I think they have, and they also are now moving into this whole building the network connections on the GPUs and the servers. And then of course NVIDIA has their own NVLink, who does the same stuff. But okay, we'll look at A-Lab next week. All right, on the crypto side, life has been boring. Nothing exciting happening. No all-time highs. It's just been range bound over the last whatever 4 or 5 weeks. That's what I think. Especially the Bitcoin has been between, I would say, 90 and 105. It just keep bouncing between these, and I like it. I'm happy with it stays range bound. You can continue to reduce your cost basis, which has been working good. XRP good to invest in. I'm not investing in XRP. I mean, you need to figure out what do you want, why do you want to invest in. If you are looking at a decentralized one, not yet there. It's a consider it as a payment processing company, and then if you're interested in that field. Oh, but then you have to be okay with that Brad Garlinghouse. He can do whatever he wants to do with XRP. So the decentralized crypto stuff doesn't work. But XRP and there are a lot of others called as the Dino coins, which were the darlings of 2017 and also went up in 2021. A lot of those coins are coming back up, right? XRP is back at number 3. At some point of time, it was above $3. Right? So lot of action happening on the meme coin, which I don't track, but I think pump.fun, you can actually, there is millions and millions of meme coin getting created because they've made it very easy, right? So, but again, that's not an area that I look at. But overall, on the Bitcoin side, only good thing that I found, is sovereign wealth fund. Now, number 7, Mubadala, which is Abu Dhabi sovereign wealth fund. This is the 7th largest holder of Bitcoin ETF, IBIT. Right? So we are seeing not just the hedge funds, etc., but the sovereign wealth fund starting getting exposure to this part of the economy, which getting exposure to Bitcoin. I don't know. There is a lot of stuff happening on the states level to put Bitcoin on the state's public treasury, either as a part of their state pension fund or maybe part of a state reserve. I think as of now there are 22 or 27 states that have either introduced the bills or are reviewing that in the committee. I think Ohio is the only one in which the House has passed the bill. Now it is to go through the Senate and finally to the governor's signature, which will allow Ohio State to put 5% of whatever their budget or reserves in Bitcoin. So seeing some action on the state side, nothing at a federal level. But yeah, it's been range bound, right? And I'm okay with that. It's a long journey. So, and if you're not in this one for at least 10 years, then you should not be in this one. That's my thinking. Sam says, what's your investment style? Short, mid, or long term? I'm a long-term investor, but for me, the long-term journey is made up of my short-term steps. But my focus is to buy the great companies which I can hold for forever. And I have talked about when there are times when you have to divorce the company, unless there is a reason for me to divorce it, I want to hold it forever. So, but there are ways, how do you not get scared out of the market? How do you hold it forever? Those are the short-term steps that I focus on to stay in the long-term journey. Buys and sells this way. Again, not a recommendation, but more from a transparency perspective. I bought TTD, and we will talk about TTD. It reported earnings and had to sell a little bit of Airbnb. I had a call spread. I had an iron condor on Airbnb, and no, I think I did a earnings trade on Airbnb and it shot up. So which was I had a butterfly. So my call spread, I closed it, sold some of the stock, and probably will put a put spread, etc., to get back into Airbnb. Again, I'm bullish on both the stocks for long term, but little bit change this week due to the option change. All right. Anything else? What are the other earnings you guys watched on? Any stocks that reported earnings for you? Made some big moves? Anything any earnings that scared you? Lyft. Yeah, Lyft reported earnings. So how is Lyft doing? I don't know. Let's look at Lyft, because Lyft is not in my agenda for okay, the post earning moves. I mean the moves after the earnings the next day was down 8%. What happened to Lyft? Was there any insight to share? What happened on it may be a short-term issue that the market is overreacting, but anything to share on the business side? What did Lyft do? Let me just pull up Lyft and see. Q revenue is up 26%, so growth and what gross $1.5 billion of revenue, $500 million of gross profit. Okay, negative operating income, probably the stock that I won't be interested in. And again, diluted the shareholder. What else I'm seeing? Non-operating income is what's keeping it in the game. Otherwise, the situation would have been even worse. I mean, this whole net income that is coming through is not coming through their business. So operationally, they still have a lot of work to do. So all that income that is coming is non-operating income, is coming something which is not related to their business. Maybe they have an investment, or this could be how much cash they have on their balance sheet. It must be or could be just the interest income that they're earning, right? So it could be part of that. Otherwise, so yeah, I'm not interested in Lyft just yet. Negative operating margins, and of course, this business is very competitive, and Lyft is concentrated only in ride sharing and only in US, and it is against one another big formidable competitor, Uber. So that's what I've stayed away from Lyft. Maybe they'll turn around. Right now, the profile doesn't look interesting to me. But that's not saying that the stock may not do well, but I'll wait for business to do better. All right, anyone else had any other earnings that you watched for? And they lowered the forward guidance. Yeah. I mean, if markets have been unforgiving, let me put it that way. You have a slight miss, etc., and the stock get hammered. I mean, I own one in my portfolio. We're gonna talk about that. It got hammered. Hood is flying. Yeah, Hood after the earnings. So Hood is one of the hot stocks. Yeah, it's up like 14%. Post earnings move up 14%. Again, I don't own Hood. I think I looked at it maybe a couple of years ago when it come IPO. But what are they done in this quarter? Total revenue of $1 billion. Revenue, oh, that's amazing. 115% revenue growth. A little dilution, how their margin profile looks. Okay, but this is the only thing is looking at these financial services companies should be viewed and I guess valued a little differently than the traditional companies. I know Hood has been attracting a lot of capital because they are doing so. I think they are giving you 3% or whatever if you move your IRA and all that. But my only thing is that sustainable? Because finance is one thing where could be an unlimited, you can increase your revenue by unlimited fashion. Because if I can give you 0% interest, let's say if I offer to a customer 0% interest, they will be okay to raise infinite amount of money. You can't do that with other goods. Some point of, let's say Nike reduces the prices of the best brand. At some point of a time, I'll run out of a demand for it. Right? How many those Nike shoes will I buy? Maybe two. Maybe I'll increase my demand double. Maybe I'll get for one for my relatives. Well, that's it. But financials or the money is one area where you can have infinite demand gen if you make it attractive enough, right? So, but that you also need to look at, can the company sustain? So that's why when you're looking at like assets under AUM growing, and you figure out, is it AUM that is growing in a Hood? Is it accretive to their earnings or is it dilutive to their earnings? But again, that's why I've not looked into Hood, but maybe I should. I mean, the stock has done wonderfully great over the last 2 years. Maybe it's like 5x or something like that. So stock has done wonderfully well. But financial services are little, I would say, difficult to understand the way sometimes they operate. 24-hour trading. Now Charles Schwab has also enabled 24-hour trading. Now they're trying to compete against some of these new fintech companies that are basically taking shares away from them. is it a hood or is it a Coinbase who's like a crypto revenue blew through all the expectations? It was like up few 100% up because of that crypto transactions. But again, if the valuation, if the stock has gone up because the crypto transactions have gone up, this crypto crowd is very fickle, and we have seen this story before, right? So we want little more stable businesses than relying on degen crypto transactions. So that's not a very, I would say, sustainable way for company to increase the revenue. Still, crypto is a very volatile, I would say, side of the business. So that's something I'll be a little concerned about. But yeah, if they've grown their business because they've attracted a lot more AUM and hence they can sell more services. I think that's the end game is let's take a loss for now to attract a lot more assets under management so that then we can sell them some retirement services, some advisory services, some wealth management services, right? This is what eventually Robinhood will try to become what Charles Schwab is, but with much better tech and much more user friendly, let's say, application interface, etc. At the end of the day, I think both so far, what of the model of Robinhood was not sustainable, right? So, but the stock has done great. If you look at it, it's up like 65% for the year. Not bad at all. Over the last, what, 1 year, right? It's up, it's become like 4 times. Right, cool. It's like, what, $13 all the way to almost 62. So if you had invested in Robinhood last year, good for you. All right, what else? All right, another interesting chart I saw, and this is where I said, sometimes I hate these hedge funds. So there's a hedge fund called whatever. How do you even pronounce? Beliasti? Whatever. Atlas Enhanced Largest Offshore Share Class in 2023. So the whole story is this. The overall gains before their fee kicked in is 15.2%. Right? So that's why when you're evaluating a performance for any fund, you need to evaluate what's the end result to the clients. But then you got almost 2% management fee, then you have some pass-through fee. The clients only gained 2.8%. Even though the fund might be talking about that, hey, our fund is up 15% for the year, or our investments have done great. We need to know what's coming in my pocket, dude. Investment is doing great, but then there's a lot of a fee that you have to pay to the management, to another advisor, and anything and everything that these hedge funds will work on. Even if they've bought a paper clips for their office, who's paying up for it? It's you, right? Or if I bought in these funds, right? Printer paper, us. Their lunches, us. If they're gonna go and meet a client and take first class ticket, coming from my pocket. It's coming from your pocket. Every penny that they spend on is business is coming from your own pocket. So if you're looking at funds, you're like, you know what? Maybe, gosh, man, this fund did 15.2%. Dig deeper into the prospectus or wherever they're publishing to see what the net gain to the clients is. 2.8%. This is like a legalized highway robbery. All those clients could have done much better if they would have just bought some cheap index ETF. I'm sure there is a reason why they would invest in this, because maybe that portion is already over there, but still like 15.2 to 2.8%. Just hate it, man. Another table for some fixed income opportunities. If you're feeling that you don't have a wherewithal to go through the volatility, which if you're invested in stock, you can't ignore it. We still have some nice fixed income opportunities in terms of the yield and the dividends. You can get like 5.3% on money market fund. You can get 4.3%. ASGO, which is a 3-month T-bill, 4.3%. Short-term bond, intermediate term bond. You will get your coupon. You will be able to clip your coupon. But if you are holding any of these bonds, traditionally people say, oh, bonds never lose money. They do. And this is on the next column, you see the 2022 return. Right? BLV, which is a long-term bond, lost 27%. 2022 was, I guess, the worst year for both the combination of stocks and the bonds. Stocks were down as well as the bonds were down in 2022. There was nothing where the investors could have. There was no place to hide for investors. The general traditional wisdom is let's create a 60-40 portfolio. As you get closer to retirement, move into bonds. I feel for those who have moved into bonds near retirement, because they also got slagged in 2022. The bonds were down as well. So why you should invest in bonds or any of these fixed income? Not for the capital return, but if you hold it through its duration, you're going to get whatever 4.3%, 4.9%. At least that it's like if you are owning a rental property, your house value may go down, but you're going to clip that monthly rent, right? You're going to get that monthly rent, assuming, the renter has got a decent credit. In these cases, the renters are, US government. So you'll probably get your rent, which is 4%, 4.5%, but the value of a bond may go down. That depends on factors like what's Fed doing to interest rate, etc. But if you want a steady state of income, there are some good opportunities still. I don't know how long it's gonna last. It depends on what's happened to the interest rates. But for fixed income investors, market is still okay. VMFXX, money market fund will never be Fed tax-free. Money market fund would be, it'll basically a normal tax rate. That won't be a Fed tax-free. Only the treasuries or the bonds you don't have to pay. No, even treasuries and the bonds they are the local tax-free. Oh, I mean, I think one of them, either you don't pay the Fed or you don't pay the local taxes on treasuries. So now as Gov, so when it comes to the ETF, because these are the treasury ETFs, I don't know how the behavior of ETF would be. When I'm saying of a treasuries, let's say if you buy the treasury directly from a treasury's website, because I did buy it, I still hold it, then you get a tax break. I don't know how the ETFs taxation is, so you may want to check it or look at or Google it or check on their prospectus, because it's now these are under the structure of ETF. They may have a different tax treatment. I'm not a CPA, so I don't know. But still, it's a decent regular income if you can continue to hold it. Right? Another one I had, the next topic I had was, is China cool again? I know we talked about China at the start of the discussion. Well, looks like all the Chinese companies have been performing. Look at Alibaba. Oh, geez, 126. This is too much too soon for me. The stock was what, close to $80 a month ago? 116, exactly 16. Okay, 115, $81. Now it has like up 50%. That, that's a huge parabolic move. What happened to Baba? I think some of the recent moves has come in on the news of Apple. And of course, Baba released its own LLM model after the DeepSeek stuff. Alibaba released its own LLM model, Quen, which probably, hey, it does much better, much cheaper, faster. And then this week was the news of Apple that uh, Alibaba is one of the companies that Apple have tied up to basically bring AI, Apple Intelligence, to their iPhones. Because of restrictions from Chinese government, they have to tie up with a local AI provider. In the I don't know if the deal is exclusive with Alibaba. I don't think it would be. Apple doesn't sign, these exclusive deals, but it could be wrong. But the stock made a huge move based on that news. Right? But gosh, even after this move, the stock is still down, let's say 60%, from where it was, from its all-time high. Right? We are still down 60%. A lot more room to cover. And then I saw on Twitter some photos of Jack Ma. Is he back in action? I think there are a lot of these positive news coming around from Alibaba side, and that's why the stock has performed. And it's not just Alibaba. I mean, look at the K-Web. Let's go back. This is a diversified Chinese internet ETF. It's been up like 25% for the year. Looking at the large cap ETF on China, and stuff, almost 17% for the year. Now is China cool again? Because now I see some fund managers talking about China. Always happen. The narratives will follow the stock price, especially on financial media. If the stock has done better, the gurus on financial media will come up for the reasons why this is great. I won't be surprised to hear that, hey, Alibaba is very cheap. They are buying back a lot of their stocks. It's the free cash flow yield is more than 10%. I don't know where it is exactly right now, but when we reviewed Alibaba last year, and I think I've looked at multiple times, its free cash flow yield was close to 16%. And I think I talked about, if it was incorporated in US, I would have made it the biggest position in my portfolio. But I couldn't because it's incorporated in China, and you have all the geopolitical risk. But company on the business side has been doing great, and they've been buying like tons of stocks.
Vivek,
Yeah,
we own offshore. We don't own Alibaba China. We own, I think, Virgin Islands or something like that.
yeah, that's what, right? That's at the start. That's what I was taking. That you only have a stake in their VIE, which is some offshore entity in Cayman Island, Virgin, BVI, one of these areas. So you don't directly own Alibaba. So that's a geopolitical risk. That's why I can't make it the biggest position in my portfolio. But if you look from the business side, their capital allocation, yeah, they've been doing great. Right? Let's look at their dividend yield or buybacks. Does it show buyback yield? Somewhere it should. Look at buybacks. They've been buying back almost 5% ever since, the market turned against it. Let's look at the annual one. Then we'll get a better picture. Right. Ever since the market turned against it like 2 years ago, all Alibaba did was just continue retire the shares. They bumped up their buybacks because the shares were depressed, right? From almost nothing to 3%, 4.5%. At this race, in next like 10 years, the company is gonna buy back half of their shares, right? So that's what attracted me, because from a yield perspective, you look at your free cash flow yield, 11%, and then they have the dividend yield also. I mean, it's good company. I can't say it about it now anymore because the stock has run up too soon. When it was 80, it was from a business fundamentals perspective, it was a great company to own if you can stomach the geopolitical risk and all the issues that come along with owning a Chinese company. I can't put a dollar number on that risk, and that's the reason why it still is a small portion of my portfolio. But it's been a great ride. So now the fund managers are trying to look at, maybe we should go back in China. Now the companies are performing well. Again, the stock price will change the narratives, right? So I'm not surprised to see this, but we need to start developing this contrarian and do our own research to find out, is it really the situation is bad, or the market is all given up because the stock price had got depressed? I know China overall economy was bad, but Alibaba as a company, when the stock was depressed, they were doing the right things. Sam said Jack Ma was buying Hong Kong shares very heavily. Yep. And Joe Sang, who is the Joe Sang or Joe Sai, whatever, the CEO, I guess that's what you're referring to, was also buying back. Yeah. How about the PDD? Again, I don't own PDD. Think or Swim has gone to sleep. Let's look PDD. Let's look at 1 year. Yeah, this week, all good. But again, we have seen the story of stimulus and all that stuff multiple times. The last 2-3 bumps, everything that we have seen out here was based on Chinese government is going to stimulate their economy, and then the stock runs up and then it cools down, right? So you really need to look into the company's earnings and see, are they fundamentally doing the better business, or it has just run up because of the news in the market. Every Chinese company would have run up because the government is now gonna stimulate the economy. Shayan says, will coin follow hood in stock price increase? Shayan, if I would know what the stock price will do, I'll be sitting on my private island, man. I've not looked at a coin, how the coin has performed, their earnings. So I can't give you the answer right now. And I don't think anyone can give you an answer. Okay. Think or some is doing maintenance or whatever. Honestly, anyone can tell you what the stock is going to do. Is it going to follow Robinhood or not? I have no idea. But they already reported earnings. Coinbase already reported earnings. And stock, did they not? I thought they all reported. They have not reported earnings. Am I wrong? Okay, they did. Maybe this one doesn't show. And the stock didn't perform well. And again, there's a lot of stuff to do. I've not looked into its earnings. Maybe the guidance is lower, or maybe the stock they beat their own guidance, but it was their it was less than the Wall Street consensus estimate. There could be hundreds of factors that could have determined the post earnings move. So yeah, but if the interest in crypto continues to grow, but which right now is not too much. I mean, I don't. It's been just sideways. But if interest continues to grow in crypto, yeah, that would bode well for coin. But you also need to know what are you willing to pay for it. And again, what's the coin basis? It's not available, at reasonable or cheap valuation, but it's not super expensive as well. But I'm not sure if this is a business that I would like to own. Yeah, I could look into this. I mean, they have turned around their operations in last 1 year. That makes interesting to look in. Right? They at least have been able to operationally change the business to at least earn their keep. But whether it'll go up or down, who knows? I don't think anyone knows. Other hot stock like Meta. What the heck is the deal with Meta? That stock continues to go up. I think it's a new record. That Meta has been up for what, 20 days in a row? At least I think that's what the CNBC were saying. That it was like the closing price of Meta has been up for 20 days in a row. What the heck is Zuck done? I mean, this, and if you look at it, like in 2022 November, the stock was trading at 70. Sorry, 90, right? Close to 90, 88 or something. And now it is what, 736. What was the narrative that time? Because the stock price was down? Oh, they don't know what they're doing. Oh, he's spending so much on metaverse, right? He's still spending the same amount of money. He's still spending the commitments that he had made on spending on metaverse, still doing that. But now the stock price is up. You'll see all the good things about Meta, right? But what's an incredible run that Meta is having in at least this year. I think this is the one of maybe the only Mag 7 stock that's up so much. I think maybe not the Nvidia is also up, but this has been I would say the best performing Mag 7 stock. It's up like 25% for the year. That's just crazy. And we are not talking about a medium size or a $10 billion, $50 billion, or $100 billion company. This damn company is $1 trillion plus, right? So if you look at it, like almost $2 trillion, and it's up 25% for the year. I think few good things are coming out of Meta. We looked at its earning results. Still continues to perform, and I guess the latest news is they want to move to humanoids now. So something is that just keep dropping some interesting ideas to keep the market interested in it. That's surprising to see. I mean, that's whatever. I'm not complaining, but this is an amazing move. So I spent some time, I think on Thursday, to look at trying to track portfolio tracking, and I realized Meta is the most profitable ticker that I own in my portfolio. I did not know that before. I thought maybe I made more money on some other stock, But nope, Meta is the most profitable ticker. I would say unrealized based on today's stock price, right? Stock goes down 10%, then who knows? But it's a wonderful, wonderful run on Meta. Blackberry is now back. And of course, a lot of other stocks have done well, but Blackberry is back because of the news around their QNX. Maybe market is now realizing the value of their operating system, which is in 250 to 300 million cars. Right? They have their QNX operating system, which they use. BlackBerry also sold off a division, which was like a drag on their profitability. They sold it to Arctic Wolf. They did an acquisition of Silence. That's why I actually got interested in BlackBerry 5 years ago, because of their Silence acquisition. But then I started to know more about a company, got more interested in their other divisions, still holding the stock. But maybe market is now realizing that the QNX is or could become the backbone or the layer for the autonomous vehicle platform. And other AV companies or the EV companies can build an application on top of it. But maybe market is come. And of course, BlackBerry also has cleaned up their house. They fired the old CEO, brought in the new CEO, who has done restructuring in terms of the focus areas where they want to focus on, and get rid of the areas which, even though was contributing to the revenue, but was a drag on their profitability. And that segment was very, very competitive. You need to continue invest in it. And they say, you know what? It's okay to divest and say, and basically take or acknowledge the fact that, guys, this is not for us. Let's focus on the areas where we are best at, rather than trying to go behind every shiny object. So this is one area wherein when suddenly I hear, oh, the revenue is growing. Is the revenue growth accretive to your value? Or is it revenue growth, is diminishing to your value? In this case, they were growing the revenue, but the business was not helping the overall company. Right? So market also like that. I see one comment. Marvin, this is my first time joining. Are you making your positions open source? I share my positions at the end of every month in this meeting, as well I share it on Twitter. So if you go to my Twitter profile, you will see at the end of Jan 2025, these were my positions. I just want to be transparent. I mean, top 15 positions. And my portfolio pizza pie. Not a recommendation of what you should own or what you should not. But yeah, I do share at the end of a month. So some of these stocks that have been running high, other ones we talked about Palantir. And that continues to defy any logic. Come on, think or swim. Are you back yet? Okay, cool. Oh my God, I said 120. It's up like 60%. Now, don't ask me to justify or give you reason why the stock is like this. I've been owner of it, enjoyed the ride. I can't even in my dreams conceive why that is where it is. Right? But yeah, stocks and the markets can stay irrational longer than you can imagine. Right? This is when a hot stock continues to stay hot for whatever reason. A lot of retail investors in it. HIMS went another high up after the Super Bowl ad? Oh, come on. So hymns is, where did that go? I think after the Super Bowl, did they report earnings? Did hymns have earnings? Or this is the Super Bowl impact? I mean, now it's up to what, $60? Maybe they figured something else out other than GLP-1. Let's look at I don't know. I looked at hymns a while ago. Maybe look at quarterly. Did they do some magic in this quarter? Revenue is up, but okay. Oh, this is the previous quarter. So this site has not updated the quarterly yet. Let's get to S&P. Oh, probably they have not even reported Q4 then, because S&P Global report is much quicker. But I mean, I don't like, last time when we looked at it, I didn't like the business yet. I don't think I like the business still, but that doesn't mean the stock price can't continue to go high. Maybe at the end, when we look at this yearly result, we'll see, what's happening. What have they figured out from a telemedicine perspective? There are a lot of companies that I've seen on telemedicine side that have come and gone. Maybe HIMSS is different, right? So we look at it. Last time when we looked at it, the business wasn't that great. So, but maybe market is seeing something, or just the stock is going up because, hey, you're getting into FOMO on HIMSS. Who'd we already talked about? The last one is AppLovin. So AppLovin, oh my God, this is, I think, the craziest of all. Not long ago, this stock was like $20, but 2 years ago, like 2024, like at $40, and now it's up to $5. It's like a 10x in 2 years. Right? And if you really get into what this company does, it allows the mobile content creators to monetize or help them in monetizing their content, right? But we don't know how great the business is. Number two is there's been a big short report on how this is basically they're moving the money around within their a few set of customers or maybe related companies. So that's kind of little shady stuff. So do your own due diligence. But the reason I brought this up is a lot of people get attracted on, gosh, AppLovin is performing so great. Stock is performing great. I'll give you that. I don't know about how great the business is performing. That you have to make your own judgment on how great the business is. Number two is the revenue that they're getting. Is it actually real revenue, or you're just circulating it among your own companies? Who has a short report on APP? I did not review it. I read that long back with an intent of maybe I'll share it here. I think I did, right? Or maybe. It's a round tripping. Again, do your own study in terms of, I mean, this got details of how they are trying to generate, or they're showing the revenue growth by taking one ad back to the game which the other company owns, and back here it's like basically within their own small circle of companies, they're just rotating and showing it as a revenue. I don't know how far this is true, but I mean, I've not looked at beyond that. What other hot stocks are you seeing coming across your circle? Any other hot stocks?
I got a question,
So-
Vivek.
Sorry, which one?
I got a question.
Yeah.
You have lots of money, right? So I found out a new strategy, not a strategy, but why don't you buy like 100 shares of Lyft? That's no problem for you, and then just let it ride, and wherever it goes, it goes.
Okay, first I don't have a lot of money. But number two is why only Lyft then? Then which stock will I put a full stop on? Why only Lyft? Why not? Why only Lyft? Why not
Oh.
other? I can't say XYZ because no, that's a real stock. Why not stock ABC?
Oh, that was an instance. So why don't you just buy a or whatever? Like I remember I brought up the story last back that if I had bought maybe I might have earned $150 back in 2012. Just put it in Tesla. So just let it ride.
Yeah, there are 3,000 plus stocks that trade on US exchange, right? If I were to take a small position every stock, rather I just buy VTI, which is actually ETF of all the stocks in US, right? So I need to figure out some criteria on which I want to evaluate and say then buy. Otherwise, what you are telling me is, hey Vivek, go and buy position in every stock because I don't know which one is going to be Nikola and which is going to be Tesla.
Well, like Vivek, I'm gonna lose a lot of money in 23andMe. Well, not a lot of money, a little money, but but then I have other stocks what's your love for Valentine's Day? At least I put in one share of that and that went up. So
Yeah.
you see up some goes up, some go down.
Exactly. And then you need to know, and what you are telling is buy everything. That's I'll just buy VTI, which is the ETF that represents the whole stock market. But if I have to pick and say not buy everything, but I have to pick one or two and or maybe 10, 20. I mean, I own 64 tickers in my portfolio as of end of Feb. Few of are ETFs and there are individual stocks also. I used to own 120 a few years ago. Then I reduced it down because hey, I want to understand, and as and when I understand more about a company, I build more conviction, I move money over there. So my idea is if you want to spread everywhere, $100 might just buy VTI or buy whatever Russell 3000 because that covers all the at least the 3,000 companies. Or if you have to buy, oh no, I want to buy maybe Tesla. Today sitting here, you don't know which will become the next Tesla. That's a problem, right? We don't know
Like
which become next Tesla.
Vivek,
Or
I should have bought a semiconductor ETF a long time ago, but it's no fun. You just leave it there. Yes, you get richer, but no, you're not looking at individual stocks, and that's you like doing that, and I like doing that.
oh,
And if I had just put in when I talked to you about the semicon ETFs, I just should have stuck it there and left it alone and let it ride.
great. That's what I'm saying. Buying a diversified ETF and hold it is the best, provided you can hold it. And that's what you're saying exactly right. Buy a good diversified ETF and hold it
No,
for.
I didn't say that. I said, I buy winners and I buy more losers, but at least, you're very active. I'm kind of active, not as experienced as you, but I bought a loser and I buy. Hopefully, I buy. I didn't buy Lyft. I did buy a couple shares of Uber though, in case it goes up.
Yeah, Uber became winner for you. It's back up to 80.
No,
And
I
I
don't
know
think the winner.
yeah, you bought Uber, you I think mentioned 2 or 3 weeks ago, right? So here's a at a high level. If you're buying individual companies, then you should follow it to see. Sometimes you could be lucky that all the individual companies that you picked did great. But if you pick these individual companies in 2021, now all those individual, like 2022, many of those high flyers have came crashing down. I have 30% of the stocks that I own are losers for me, which is fine. I mean, 60, even if I can get 60% right, that's a good hitting percentage. And again, that's the reason I say I don't want to sell the stock is for for what you mentioned. If the business is doing good, I'll hold it for long. Who knows which will become next Tesla? There are thousands of stocks. I can't buy them all. But what I want to buy for individual stocks, I want to make sure that I understand those stocks. Are you interested in a defense stock like LNT, NOC, etc.? Trump saying investment in defense may be halved. I don't own any individual defense companies because, again, the lot of these defense companies are dependent on government and administration. You don't have a huge pricing power over there. And also, you don't know when the next admin will come in, what will be their policy. So I generally would try to stay away from getting a specific exposure to the sectors where the companies cannot control their own destiny. Right? If Lockheed Martin starts selling, if there was a world in which they are also selling to the commercials and the retails, I hope there is no such world that we are selling missiles to anyone who asks for it. But that's why I don't get an individual exposure to the defense. If you want to buy it, maybe pick ETF. There are a couple of ETFs on the related to the defense, but I don't own even this ETF. So my exposure to the defense will be through the SPY ETF, right? Yeah, Ramesh has mentioned ITA ETF. That's a defense company's ETF. But I mean, they don't control their own destiny. They are very much dependent on what the government regulations are across the world, not even just in US. If some defense company have more or growing commercial revenue, yeah, I can look into that one. I mean, Palantir, I got interested in when they started growing their commercial segment. So if there's a company that's got a commercial, because then you can control your pricing, then you are not dependent on 198 max limit of customer or out of 195 countries, and out of which, there will be 50 countries that you don't want to sell it to. But if you're a commercial, you can sell it to thousands of enterprises. Right? So, yeah, I know the defense companies, the stocks were hammered after Trump said that we should cut down the expenditure. This is what one tweet can do to the stocks. That's why I don't own this. Some hot stocks powering AI, VST, Vistara, Constellation, CEG, Oklo. What's the NRG? And I know that after the DeepSeek stuff, oh, it's energy itself. Yeah. Well, the revenue has been down for what, 2 years? But who cares? They're supplying to AI. So maybe a lot of these AI related energy stocks are going up. Geez. These are all hot stocks. I'm looking for a hot stock plus hot business. Some companies taking advantage of AI. TEM. Oh, this is the Nancy Pelosi stock. Yeah, NBIS. I yesterday saw Stanley Druckenmiller or someone has taken on an EBS group or 0.72 asset management. That's the first time I came across this name called NBIS. But
Yeah, there was some news that NVIDIA had some interest or something. That's what
yeah,
I
I think
saw.
maybe NVIDIA. Well, I will look into the 13F now. We'll say again. What's the mood here? There's no mode in this business. You were okay. Yeah, it was so it was Yandex NV, which is like, I thought, come on, NVA took a stake in a Yandex search engine, which was a Russian search engine, because the NVIDIA report shows YNDX as a ticker. When I went to ticker, it says Nebius Group. Like, come on, right now you can change your name to or add AI behind it. The stock will go high. I'm not chasing it. Okay. Docs, I understand, but Docs has been around even before AI. Their business model is different, right? So Docs and NBIS or TEM are very different companies. HIMS we talk about. PG is what, Progeny? Oh, Pagaya. Again, it's the same stuff like an ABS. Yeah, we're deploying data science, artificial intelligent AI technology to do what? There will be a lot of services company will now change their name, or product company will change their name to AI just to ride on it. Again, I'm not saying don't paint everything with us, the widest stroke of the brush. Don't put everyone under the same light. Look at individual businesses and see, has anything changed in the business? Are they good businesses to own or not? Stock prices will all cool down once the interest in AI will cool down. So the roller coaster ride. If you have figured out when to get down, great. Good for you. I don't want to even get into the game of let's right now, let's go for a few months until AI goes on. I'll get down before everyone else. I'm not that smart in trying to figure out when to get down from a roller coaster that is running about 60 miles per hour and going up and down, up and down. I have no idea. So I'm like, you know what? I'm not going to get onto this roller coaster. If the business is good, yeah, then I'll hold it. So I'll to look into individual company and see why that is. Confluent, we reviewed Confluent. At that time it was, it's only based on the data streaming Kafka. They're basically commercializing Kafka, which then you don't have a much bigger say in a larger project. And I've worked in some similar companies in my past life, during my corporate life, and I know how it's a very difficult to build a business on an open source tech, right? And Confluent is only on the data streaming built on top of Kafka. Right? So they don't own the whole story of the data platform, right? So about 10 days ago, inside of AMD, about 500K shares of AMD. I think AMD is going to release a new chip. Like last week, someone was saying new GPU chips they're going to release. Maybe in anticipation of that, probably. But we looked at both AMD and NVIDIA, right? Was it last week or week before that? Side by side, compared it. Because the AMD is now being treated in market. Oh, if you miss the NVIDIA bus, let's jump onto AMD train. These are very different businesses. Or the business performance so far over the past 10, 15 years have been very different. NVIDIA has done much better. Forget stock price, just at the business level. AMD has not. Maybe in the future they will, but let the future unfold itself. All right, so let's look at some 13 Fs, and then eventually we get into earnings if there is time for earnings. But now maybe we can look at some 13 Fs and see what some of these so-called smart money managers have been doing. What are they bought and sold at the end of Q4 2024. Now we are 45 days into it. Things could have changed, which we'll get to know, next quarter. But you interested in that, or shall we go to earnings? Let me ask you guys. I can do either of these things. 13F. What happened with Trade Desk? Trade Desk reported results. And after 32 consecutive quarters or of or for the whole life of IPO, if you had never missed and you missed for the first time, market goes crazy. That's what happened to traders. They missed their own guidance. Forget about the street one, but they also missed their own guidance. And the stock was hammered. It's down like 33%, right? So that's what happened with Trade Desk. Or maybe let's look at Trade Desk, then we'll go, since there's a question on Trade Desk. I did post. Overall, if you look at it, the picture wasn't that bad that you would wonder that why the stock is down, like lost 1/3 of its value. Because revenue is still up 22%, gross profit is up, EPS is up 80%, adjusted EBITDA 350 million, free cash flow 180 million, right? 22% revenue growth is not bad, but it missed the street expectation. I can still be, not only the street expectation, its own guidance was at least 756 million, and it missed that by 15 million. That's like when the company says that my guidance is this, and as a company, for the 32 quarters consecutively, you have always beaten your own guidance, and now you missed it. It was the first miss. So market really got spooked. Dude, something is cooking here. Something has happened that we can't put our finger on. And the stock sold off. Yeah, whatever. CEO told it is like we had a small missteps and we making a few changes in here, right? Which is little overlap between the directly going through the agencies or directly going through the big brands. Oh, basically he told one thing which I liked about Jeff Green, who's the CEO, was very forthcoming. He did not blame it on a leap year, that the last it was a leap year or whatever. The overall economic solution. He says we messed up. It was a miss on our part, and we're gonna fix it. So at least the CEO is very forthcoming in owning the mistake, and he told exactly what we're gonna do, right? So I'll give them a little bit time. And then the guidance they gave was lower than the street expectation. Yeah, so that's what the stock sold off. That's what happens. If you continue to beat your own guidance for so many years, it does happen. And the stock is not cheap, right? It's these growth stocks always trade at premium, and any crack in your operations will make a huge swings in it, right? But if you like the business, now it is available like 35% cheaper, I would say. So I did buy a little bit of it. But my biggest concern here, which I did not see, and I don't think any CEO would say, is Amazon is moving into the DSP, demand side platform on the tech side, right? Now, how big is that threat? Is it because of that they had a $15 million less revenue than what they had committed for? Or is it really the issues that Jeff Green has highlighted? I want to give them a couple of quarters before deciding yay or nay on the stock, right? One quarter doesn't mean anything for me. Maybe I'll give him a year or two to see what Jeff Green is doing. He's been an excellent CEO. His team has performed. But this week, the prior weekend, Sunday, Chiefs lost. Eagles won. Happens. Does that mean now the odds of Chief winning a Super Bowl has completely crashed? I don't think so. So that's what happened with TTD. A miss on their own guidance. And when the stock is priced to perfection, market doesn't like it. All right, let's go to 13F reviews. But if you're a long-term investor and you think, hey, I want to own TTD, now you can get 35% cheaper than what you was about to get like a few days ago.
Thank you, Vivek. Just a question. And do you know, so who are their real customers, I can see they're saying their mission is to make ads more relevant. So what are their major sources of revenue?
So Trade Desk is basically a programmatic ad tech platform. So they are the demand side platform. The way they work is they work with all the customers who want to show ads, right? So let's say the big brands like your CPG companies, any consumer products ones, etc. And let's say I'm a Coca-Cola company, right? Now most of the ad buying and sell is moving towards programmatic, right? And now I have given a profile saying if any visitor is of this demographic and meets my criteria, I want to, show this ad, and then you figure out how much you want to pay for it, etc.
Yeah.
So Trade Desk becomes a kind of a engine which does this matching and find the best place to show the ads. Right. So now, if Amazon is getting into that, number one is Amazon has a walled garden, right? And Trade Desk play is that if you go to the Google, you're gonna get highlighted ad, let's say the Google properties. Google has got a walled garden. Facebook has a walled garden. So it does compete against many of these big advertisers. But their pitch to their customers is these all are walled gardens. But we are neutral, right? Google may not want to show you, the may not place your ad outside of a Google properties. So that's their pitch. The stock has done wonderfully well over years. I mean, even after this fall, I mean, I'm still profitable on Trade Desk. But you get a huge, if you miss, market punishes you.
Yeah. Thank you. That's interesting because I've sold adverts on Google and Facebook, but never really looked into Trade Desk.
Yeah, so basically now more and more advertising becoming programmatic in terms in the fraction of seconds will decide what to show, where to show, how much to pay. There are no auctions that keep running.
Yep.
Both the demand side as the supply side of the ads. There are many of these companies who manage this electronically. Trade Desk is the biggest one. There are other companies in the similar profile. There's a PubMatic, which is again competitor of Trade Desk. There's a Magnite. Then there are, I think, MathWorks or something. There are a few companies which are in the similar business. All right, let's talk about 13F. Let me sip some water. So I think I have a data of almost 79 fund managers. CNBC, Bloomberg will probably talk about a few. They'll talk about Warren Buffett, David Tepper, maybe Stan Druckenmiller, what he's doing, Steve Cohen, but not going to talk about all 79. Okay. So tell me if any fund that you have in mind, we can look at what's the top 10 holdings. Anyway, it's for you guys. I'm interested in what Billy Gifford has because he is an investor. He's been an early investor in a lot of e-commerce company across the world. That gives me some consolation. Amazon is still highest. Mercado Libre, which is my individual biggest position, he's in it. Nvidia, Shopify, Spotify, C Limited, Trade Desk, Netflix, PDD, Coupang. Okay. FIW. Come on, give me. Is that the name of a fund manager or name of the stock, Sachin? Maybe we'll switch and see what's happening to my stock. Right. Okay. So I'm interested in, I own Coupang. Who else is owning Coupang? Or what have the folks done to Coupang? Right. What the smart money did with my stock? A lot of them actually reduced their position. Stanley Druckenmiller, he had some point of time 9 to 10% of his holdings in Coupang. Looks like this quarter he reduced it by 25%. Now he's only owned 5.26%. I don't see somebody has completely exited. Dennis Song, I don't know who that is. Not a big one. But I don't see many folks or anyone adding into Coupang in this quarter, right? But only big sales are coming from Stanley Druckenmiller. This is anyway was a small part of portfolio, but majority are new change. But some 3 funds have added a new positions in the Coupang. Let me look at the favorite one, my biggest individual stock position, Melly. What have they done? Who added 0.72? That's a Stephen Cohen hedge fund. They increase, okay, but it's a very small part of their portfolio. They increased their position by 245%, but still very small part of portfolio. Stanley Druckenmiller is rotating from, looks like rotating from Coupang into Mercado Libre. And then a few of them have reduced it. Give me another ticker, FIW. FIW. None of them have actually have a positions or they've traded in this one over in this in Q4.
What about Apple?
All right, let's go to Max 7. Why only Apple? Let's start here. I have created a sheet for Max 7. Let me see. Niyanka say, will you share this? Yeah, I need to put the stuff on Twitter. Like I just finished like 5 minutes before the meeting. I was late, but I'll put on Twitter and I'll share the link. If you follow me on Twitter, just give me the keyword. I'll share the link. Apple. What are folks doing with Apple? Who's added 72% in? Oh, Giverny Capital, Francio Rochon. They added. I don't know about Cohn Brothers, who they are. But 4 fund managers exited completely out of Apple. I don't know this. Terry Smith. Aditya, your favorite fund manager. Oh, Terry Smith exited Apple. I need to go and read his letter. What's his logic is. I'm a fund smith. He's a good investor. So I need to see what his thought is on Apple. Viking Global Investors completely exited. And Daniel Loeb, third point, completely exited Apple. So one thing is 3 fund managers added. Majority, a lot of them actually reduced. Like these value fund investors, like if you look at Chris Bloomstram, is a traditional value investor. Terry Smith, value investor. They don't think that the Apple is, they think that the Apple is over, or they thought that Apple was overvalued at the end of Q4. Let me put it that way, right? So where was Apple? At the end of Q4, I don't know where they sold between Q3 and Q4, but yeah, stock was overvalued. I mean, it was like really near to all-time high. Let's look at Microsoft. Microsoft is where I see a lot more fund managers actually added to Microsoft. Right? I don't see that much onto the Apple. A couple of them added new positions. Robert, I don't know who that is. Given a capital. Who exited? Greenleaf Lane Capital. Don't know how big is that. Tesla. Who exited? Viking has exited Tesla. Is the Viking what? Are they now on exit mode? VIKI. Oh wow, they exited a lot of. Okay, but oh, so they're more on the financial services are their biggest holdings, and then Microsoft, Fortive. Okay, let's go back to Max 7. And who have reduced 40% reduction? Bailey Gifford. Like I don't know if this is Elon Musk effect. Who's 46%? Altimeter Capital. What happened to Brad Gerstner? He's like Tesla fan, right? These are like besties. Follow the money. Follow the money. Don't follow what they come and talk about on CNBC. You would hear Brad Gerstner talking about FSD of Tesla. And I think, was it a previous quarter? Or was it prior to that? He talked about Uber and everything else. But if you look at what his fund has done, he sold everything in Uber. Dude. So follow the money. Don't follow the narrative or whatever these fund managers say on financial media. So I'm surprised that Altimeter Capital are like cut it almost by half.
Vivek, I had heard that Berkshire Hathaway still has a big Apple position in spite of what they exited. Is that correct?
Well, let's look at it. I don't know. I mean, because I've not gone through this yet. So let me look at Berkshire Hathaway. BER.
Because they took some profit in Apple, but they still have.
Yeah. I mean, we can also look at what did they sell. So their biggest is still Apple, man. 28% of its portfolio is still Apple. And they did not, this quarter, they did not make any change in Apple. So more than almost 1/3 of Berkshire Hathaway is still Apple. Those sold some Bank of America. What else they sold? Capital. Oh, so now Warren Buffett is what? Let's say only reduce and exit. So he sold financials, communication, okay, new holdings. Okay, one of the big reasons like I see on Twitter, folks were getting into new holdings is that hey, even Warren Buffett owns it. He sold half of it, and then he sold all the S&P 500 ETF. He's out of Ulta Beauty. Someone talked about Ulta, and we said, hey, I remember discussing it when Warren Buffett bought it.
Yes, yeah.
Out. He's out.
Made his money.
So I don't know when did he buy it, but ignore all that what we talked about. He's out. He's not in Ultra anymore. He sold his S&P 500 ETF, both the Vanguard as well as PDR. So it looks like he's out of financials. What is the new stuff that he added? Constellation Brands. Beer. I don't think Constellation Brands did that well in the recent earnings. Okay. So we all looked at exit. What do we want to look at? New? Let's see what's new. Nothing. No new ticker for Warren Buffett. Either he added. Oh, also there is one. Oh, Constellation we looked at. That's the only one new. Okay. All right, let's go back. Max 7. Tesla. Daniel Loeb bought Tesla 25%. He increased his position by 25% in Tesla. No one else bought Tesla. Out of the 80 fund managers, only one added to the position in Tesla. Where I do see, Microsoft, a lot of ads on Amazon. I see more fund managers have reduced their positions in Max 7, maybe because there are a few reasons could be right. You want to realize the gains, and then then Max 7 had worked wonderfully last year. Now how do you then you can realize the gain and distribute it. You may have to sell it. That may be reason, or maybe hey, it's run up too much too soon, or maybe it's already up whatever 20-30% and market is concentrated. I don't know the reason. It doesn't tell you the reason, but it does tell you what the heck that they have been doing. I see more sells or the reductions sells across the Max 7s and fewer buys on Mag 7. This is what we're looking at Amazon. Maverick Capital increased by 16%, and then 0.72 asset management a little bit. Alphabet, who added? David Abrams. Any big ads? Well, I think the Giverny Capital is now becoming, at least we saw in a Giverny Capital, is where they are adding more to the Mag 7s now. Or they added more to the Mag 7s in Q4, not now. Berkshire, Meta, Alphabet. Oh, there are a lot of stuff. Apple. Yeah, so I think they added a lot more on the tech sites. On Alphabet, I do see a lot of buys. How about the Meta? Again, so Daniel Loeb, Meta is now his 5% position, which is a decent position to be in. I mean, I can ignore it if it is, like, say, less than 1%, but that doesn't mean much, but this is a decent position. Terry Smith owns, even after reducing by 6%, still it's almost 11.5% in Meta. Altimeter Capital reduced a little bit. Not a huge changes. 22%. Egerton Capital reduced it. At a high level, I think there have been more reductions than additions on Mag 7 for them. Batman is a new acronym, and one of them, Broadcom. Let's look at Broadcom. Broadcom is AVGO. It did attract, okay, 0.22%, not a big issue. Only one fund is actually having more than 10% at the end of Q4. Maybe the Broadcom started running afterwards. But at the end of Q4, not too many funds actually hold some big. Why is it not sure? What, something happened to Think or Sim? What, 3 year, 1 year, 1 day? Whatever. Let's go to look at AVGO. No, I mean, it was, this is end of Q4. Yeah, so not too much of institution participation in AVGO. AVGO split 10:1. I mean, institutions don't care about the split because split doesn't mean anything for the. I mean, it's the overall pizza size is still the same. I know a lot of retail investors get excited, but institutions don't. So they didn't add much. What other stock? I do have what, chips sector? Micron. Okay, this might be a eye test. This should be okay. 20% reduction, Maverick Capital. David Tepper added to semiconductor, Micron. TSM, there are a lot of buys to the TSM last quarter. Taiwan Semiconductor. AMD, not too much. I think David Tepper bought. Looks like David Tepper is getting, I see his name here as well. NVIDIA, what is he trying to get bigger into? Chips. David Tepper, Appaloosa. Let's look at only the ads. and new position. Ooh, add it to Alibaba. Alibaba is now the biggest position for David Tepper. Oh no, I shouldn't say biggest because I've not looked at the other ones. But it's 15%. I would say it's a big position, 15%. I wouldn't be comfortable with holding 15% in, but obviously he's a legend. Maybe I should increase it, my holdings in Alibaba. Pinduoduo is big on China. Vistra Corp, they added, like, increased by more than 100%. JD.com increased its position. China ETF, NRG, ASML doubled its position in ASML. Nvidia, Micron, and then Uber. So yeah, Tepper is going all in China. He's not scared. Also, Alibaba is the biggest position. Second is Amazon. But David Tepper. Who else is in Baba? Okay, so here I have for Baba. Who else added? Michael Burry. Oh, Michael Burry's 25% is in Alibaba? That's crazy. That's a huge risk appetite for Michael Burry. What the heck he did? Oh man, this is interesting. I'm not going to do the rest of the earnings. This is interesting. 25% in Alibaba and almost 24%. So 50% of portfolio is in China. And hold on. We haven't looked at Baidu yet. At Baidu, 65%. JD.com is sold. Oh, no, he added, but pretty, very small maybe. Oh, that's amazing. 65% of Michael Burry is in China. And we say China is uninvestable. He may not be around for longer, I guess. Okay, which other fund manager or a stock? Otherwise, I'll just keep going down the list and see who is holding or who is doing what to the stocks that I own. You give me your one so that I can go yours first. TSM we looked at, Broadcom. We looked at Broadcom, we talked about Qualcomm. Not much activity on Qualcomm. One small position new initiated, one reduction. TXN is Texas Instruments. One exit, complete exit. Not too much of a conviction. 3% is the highest for any fund. Applied Materials, Davis Advisors is 4.45%. Analog Digital, 4.74% is the highest one. Intel, 80% out. Chris Davis, Premvatsa Fairfax is completely out. Broadcom we looked at, AMD we looked at. Hey, we talked about Blackberry. Let's see if last quarter any institutions bought into this. Nope. Okay, he's no change. Last quarter, I think Premvatsa he sold, but it's 11% of portfolio. This is a huge one. But last quarter it sold off. Satish, where do we get this data? Can you refer any site? There is not one site. So what I did is from a multiple site I've consolidated. I'll have to put it on shareable drive. What I do is I'll put it on shareable drive, and if you're on Twitter, you're following me, ask for it, I'll share the link to you. TMUS, I did that after previous quarter also, but like today morning is when I just finished consolidating the data. I have not put it on Twitter. So you're getting a peek before it goes on Twitter. TMUS, that is T-Mobile. PMUS. No additions, only reductions, and not huge conviction. So these are all the, again, you don't have a short positions, or you don't have a in this one, right? If I sold some stock short, I don't think it tells you the short positions. It's the long positions only. Helene Becker, give me the ticker, please. T-Mobile did tie up Starlink, but that's news is now. This is as the end of Q4. So T-Mobile did tie up Starlink. I think that's a good, probably good news for. I don't know if it's a good news for the stock or not, but obviously it expands their coverage and can bring in more customers onto their fold. But that news is very recent one. So Warren Buffett hold little bit 0.36% of T-Mobile. Okay, any other stock? Exxon, the company that I miss. No, not much institutional investors on Exxon. Oops. And basically I track these right, I think I have 79 fund managers right now. So if you want to, oh come on, collapse to all. Let me tell you which. Oh geez. Collapse. So if you have a particular fund manager name in mind, do let me know. But these are the fund managers that I have the data for. Right? I think I've got 79. Maybe one of them have not reported yet, which is strange. Or maybe because the deadline is today. ANET, Arista Networks. Oh yes, there are some institutions look like, but not a huge conviction. 1.66%. I mean, it's more than 1%, more than 1.5%. So it isn't, but not huge conviction. Again, Palo Alto Networks. This is just a trading, right? 0.4%. Won't pay any attention to this. CRWD. Tiger Global has one. 1%. Not much of a difference. How about the retail favorite, Palantir? Nothing much. So I don't know where where this, like Twitter keeps talking about institutional investor interest. Where? I don't see that. Yet. Cathy Wood, ARKK. Cathy Wood is an investor in this. So that's an ETF, right? At any time you can go and do an ETF. So this doesn't talk about the ETFs. Because that information is open. IONQ, nothing. We'll talk about hims and hers, another hot stock. Oh, there is. Who is interested in hims? Oh, what is Howard Mark doing? What was he doing in hims? He's a distressed investor, but they exited completely. There's one reported on is Howard Marks, Oaktree Capital, complete exit on hims. What will be more fun is to look at this thing, which is basically who added. And or maybe that is it by top 5 or what's the filter I added? So I think probably I had a filter on. So is it right? Okay, I don't want to press it now, but looking at it, some of these have a huge changes in the positions. So let's say I want to know what altimeter is done. So they added 31% in Google and Zillow. Daniel Loeb, big conviction trades is Meta, 22%. Additions in Meta, Tesla, 25%. I think this is Flutter. Greenlight Capital. Wow, ISC, Barry Diller. Interesting. Peloton, 40%. Let's look at Peloton. Is company still surviving? Peloton. Okay, but not, they only added by 40%, but still a very small position in Peloton. Hood. Hood. Nope. Might be just in the ETFs. Nothing reported on Hood. Let me see what is, okay. We all looked at sign management. Look at Terry Smith. Oops. We're looking at here. Okay, not too big a conviction trades. Which other fund manager? Okay, Stanley Druckenmiller added 11% to Mercado Libre, 87% increase in TSM. There's some Argentinian ETFs I see. But these are some of the big additions to their existing capitals. NVIDIA. Did I not have NVIDIA in Max 7? How can we have a Mac? No, NVIDIA is there. Okay, maybe we missed going through it. So Druckenmiller, no, this is Stephen Cohen added a little bit to NVIDIA, but still a very small position. David Tepper added a little bit, but still 1.4%. Tiger Global has got a big position, 5%, and Maverick Capital has 5%. Even after a little bit of reductions that both of them have done. Right. Do they have to disclose their ETF investment? Some of them do, but yeah, so they do have to put it that way. I think they do. Let's go to altimeter. Let me go and see, pick up, let's say, altimeter capital. Or so Berkshire already sold off all ETFs, we know. From 20, yeah, I think this probably makes up 200. 20, 40, 2060 probably will add up. Yes, I don't see any ETF in here. I guess they probably have to report. But again, I'm not sure. I think they have to report all their holdings because I've seen holdings of some of these like traders who have reported few hundreds of holdings. Cool. All right, if I can hang around for another 10 minutes, but this is the last topic. What else you want to see? If you're not on Twitter, this is your chance to get deep into what else are these guys doing? What else are these guys up to? Okay, let's look at the other stuff. Top 10 most owned stocks. Okay, I got a ticker MA. MasterCard. A huge following. Guys, peer 12%. These are like famed value investors. 17%. Value for I think Value for recently released their investor. I need to read that. 17%. Mostly reductions. Otherwise, the big investors have almost no changes. That's on MasterCard. Let's look at a high level top 10 most owned stocks. None of the hot stocks are in there. They stay with what's been working, right? Alphabet. And Alphabet, I think we have got like 2 tickers, right? So Google and Google, 34 funds have whatever that ticker is. And okay. And then Microsoft is number 2. Visa is number 3. Amazon 25. Meta, Apple, United Health, Berkshire, MasterCard, Wells Fargo. Right? These are the top 10 most owned stocks. So ignore all the noise on institutions are coming for this hot stock, that stock, like very small. Across the 80 fund managers, they stay with what's the tried and tested. Good businesses, right? May not be the best performing stocks. Microsoft hasn't done much. Microsoft didn't do much last year, but still Microsoft is like one of the top most owned stocks in this portfolio. Top bets in terms of maximum percent that you could allocate to your fund. Now, I don't know what the size of these funds is. You don't get that. But St. Joe Company, some fund is allocated 78% to this. Carvana, we also looked at last quarter, is the same stuff. 75% is in 14 funds are there, and like one of them have 75%. Icon, this will be called Icon, his own company. ARM Holdings, 44 is a part of 44% of someone's portfolio. I think the others as well. This is interesting. Top 10 positions increased by most fund managers. 10 funds have added to Microsoft. That's interesting. Intuit. 6 funds have added to Intuit. Same as Alphabet. That's interesting. I need to take note of INTU. What's happening over there? And then you got some of the other ones. New positions. 4 funds open a new position in Capital One. And then obviously 3 or 2 funds or 1, smaller ones. But this is interesting. All right. Looks like no more ticker to look at or any other fund manager to look at. Well, interesting one. To look, not only focus on one, but see across, maybe David Tepper is buying XYZ. What are the others doing? So it's a good to look at across these fund managers, what's happening to your ticker, right? What are they thinking? Cool. That's it for today, guys. And
Hey,
again,
Vivek,
sure.
will you be posting it on your option gig site or not?
No, I put it on Twitter. I have to maybe find a link on the site. Good reminder. I'll put it on the site that because I've never done that on the website. So, but that
That would be
probably will
great.
take time. But on Twitter, it will go today.
Okay, thanks.
Cool. Anything else? What's my Twitter handle? Oh, cool. Yeah, no, I don't think shit. Sorry. Mine is to get to this. Yeah, okay. Last fun stuff, right? That's my love letter to Mercado Libre. ChatGPT does a good job, man. ChatGPT is a good job. So basically, the prompt I gave was to, hey, look at the different business units. It missed a few business units, but that's okay. And create a love letter for someone who is a long-term investor and want to stay invested in it as long as the business perform. So I did nice work on this Valentine Day. I feel it's time to express my love, not to a person, but to you, my true financial infatuation. I don't think I'm infatuated, but whatever, right? So it's good. If you have a time, yeah, read it. You should do it for your own stock, okay? It was fun. All right, guys, too much fun. Thank you for joining in today. And yeah, we'll talk again next week. Anything for the next week? Any ticker you want me to quickly look at? I'll give you the overall, the business metrics for the next week. Serve Robotics, SERV. NVIDIA sold off its Serve Robotics position. That I know. I want to. I mean, it's a new company. I don't think it's doing that. It's just riding the coattails of. It doesn't have much history.
I just keep seeing their robots on the roads in LA.
Yeah. Come on, the companies, they got what, $1 million revenue. This is a kid who has just been born. Give him a few months, man, before you bet on the kid. I'm not saying that the kid cannot be Einstein. Give him a few months.
Yeah.
So there's
Just the
nothing much I
stock,
can do. There's no history to even look at any financials. It's all about the story. If you believe in the story, whatever, take it.
the stock's down 30% in 5 days.
All right. They diluted by like 200%. It's all story, Aditya. It's nothing. There is no business yet to be made. Could they make a business? Sure, it will become Tesla. Could it become Nikola? Sure, it's an equal probability that it could become Nikola. So, and I don't have any insight to tell you what it would be. Look at these numbers. Okay. All righty. Sure. Thanks, everyone. We'll talk again next week. Bye-bye.
Thank you. Bye.